In this episode of Investing Mastermind Podcast, we're continuing our discussion. This is the third episode on Berkshire Hathaway annual meeting. And if you haven't listened to the two other episodes, I definitely encourage you to go back and listen to what we have to say about Warren Buffett's annual meeting and everything that went down. But today we're on the third episode where we're diving into all the great investment knowledge that we got from the meeting. My name is Signe Lundholt.
And I'm Michelle Markey.
Michelle, we're about to wrap up talking about the Berkshire meeting, and then we're going to talk about all of the other things that actually happened at the meeting. But what were some main takeaways you took away? What were something that you got out of watching the Berkshire Hathaway annual meeting on the live stream?
Yeah, and actually, there were two things that come to mind. I'll say both of them so I don't forget to bring it up because I'm so excited to have shared some of these small lessons I've learned, and maybe they're big things or maybe not. But the one thing is there were some shareholders that would ask Buffett, what is so great about your successor, Greg Abel? And Buffett mostly dodged the question, surprisingly. Like, you would think that he should be singing his praises of, like, yeah, Greg is so amazing. He does all this stuff. But he usually ended up talking about historical things or more of Buffett's experiences, really not enlightening us of what makes Greg so special that he should be the next CEO of Berkshire Hathaway. So I thought that was a little bit funny. There was a later
Yeah, I
question.
actually didn't even notice that, but I think that's a super good point now that you say it. I actually do remember. Sorry for interrupting. Go ahead.
Yeah, right. And later on, there was some other question, and eventually Buffett sang some of the praises of Greg, but it wasn't in a direct answer to a question of why did you choose Greg, basically. And we know from prior Berkshire meetings that Buffett has said he wants to be remembered as a teacher. So I think that was part of his legacy when he's going out on his own terms, that after 60 years at the helm, people will remember that Buffett was a really good teacher, in addition to being a kick-ass capital allocator and all that, just, no big deal. But it was more important to Buffett to be remembered as a teacher. And at one point, we heard Greg say what he would like to be remembered for in his legacy would be to be a good coach and a good father. So I think that'll be interesting to see if when Buffett finally did say, oh, yeah, Greg is good at being more of a bridge between the business and some of the stakeholders involved. Buffett was more hands off, but he finally acknowledged what makes Greg a good successor, in that he's willing to go more of the distance to foster relationships. And hopefully Greg will do that. Hopefully he'll be more of a coach to these businesses, more than maybe Buffett was. And hopefully Berkshire will continue to benefit from that leadership.
Yeah, and like Buffett said, he works more than I do, than I ever did. So, but we also know that Warren Buffett, he likes to not necessarily work a whole lot. He likes to let the managers of Berkshire Hathaway, all the different business units, do the work, or to be experts within each of their areas. And as you said, then he'll make some great capital allocation priorities. All right, so we're almost wrapping up from the annual meeting. Anything you noticed, any aha moments, anything you want to share, Michelle, about the annual meeting before we move on, you want to mention?
Yes, and this may be a bit of a stock tip. So normally Buffett doesn't reveal too many stock tips besides the ones we talked about earlier with the Japanese companies. But one other stock tip he may have revealed is maybe Buffett doesn't think Berkshire Hathaway stock is that good of a deal right now, because Berkshire Hathaway has not been buying back shares, and he somewhat blamed it on the 1% share repurchase tax that are now being put on corporations. But even still, you see other companies like Apple buying back their shares. So maybe Apple thinks their company is still a good deal right now. But unlike Apple, Berkshire has not been buying back shares. So that's a bit of a stock tip of, if Buffett isn't even buying back his own company, it should give us pause if we think Berkshire Hathaway is a good buy right now in the middle of 2025. So just keep that a little bit in the back of your mind as a little bit of a stock tip hint from Buffett himself.
I didn't hear that in that question, but that's very interesting to look at it that way. he said that, I remember for that question, he did say that something individual investors, an advantage that we have is that we don't have this new tax. And also talking about Apple, one of the first thing he said that day was that Tim Cook had actually done a better job compounding and growing the Apple business that he had ever done with Berkshire Hathaway. So that was also a huge compliment also to Tim Cook. So that was great. Okay, so I would love to also share some of the other findings that I had during my time in Omaha, because the Berkshire Hathaway annual meeting is definitely the main event there, and it's on Saturday. And this time it was only Saturday morning for a couple of hours. Usually the Q&A would go on and on for multiple hours. This time it was only the first part of the day. But on the event actually starts already Thursday, Friday. There's also Sunday events that is going on, and there's like open attendance, so you can come if you want to, and other are by invitation only, and even others are like super secret. So there's a whole lot of things going on and a lot of networking opportunities at the meeting. Also, one of the events that I usually attend is Vitaly Katzenelson's Q&A. So Vitaly Katzenelson, he's a author, he's an investment manager, he has a fund, I believe, IMA, and he does this Q&A. The first time I attended a couple of years ago, it was actually a small crowd. And this year they had a whole large conference room in a hotel. So it's grown over the years. But I also want to say that Vitaly Katzenelson is sort of like, his QA sessions is very much like a young Warren Buffett or a younger Warren Buffett. He can speak his mind, and he's being very open about what he thinks, and I think his answers are excellent. What I really like about him is once the question has come, he just takes a few seconds where he doesn't say anything to kind of get his mind right, and then gold comes out. One of the great quotes I have from his Q&A is investing between the tweets, and he says we live in a world where we are investing between the tweets. I thought it was a great quote, right? It sounds, it's true, and it's also just a great headline, so to speak, right? And what he means by that is that the American president has made some social media posts on Truth Social and on X, etc., that have moved the market, both moved the market down as well as moved the market up. And he's done multiple. So the landscape we're in right now as investors has changed to the extent that we're investing through the tweets. So I thought it's true, and also really liked the kind of headline he had around that.
Yeah, and it almost sounds like a little bit of market manipulation, because if some people have a little bit of insider knowledge of, like, if they know that certain policy announcements are going to be made, like we're going to hike up tariffs, and then a few days later it's like, just kidding. Somebody who's a trader could make lots of money if they kind of understand some of that and can kind of predict how some of that could impact the market. So to me, as a just everyday retail investor, it feels a little bit manipulative of, like, people who could be in the inner circle. If they know about this, they could get very rich in making profitable moves should they know what kinds of announcements are going to be made that could manipulate the market. So it's a little bit of something I feel a bit wary about, of this idea of investing between the tweets. And if people who are not in the inner circle can be wise to that, maybe that's what Vitaly is giving a heads up. And if you can predict how things are going to go, you could make some trades that could make some people ridiculously wealthy or poor if you make the wrong bet.
Absolutely agree on that point, Michelle. So thank you for saying that, because that was actually also what Vitaly Katzenelson was alluding to, and I feel exactly the same. Another question he got, Vitaly Katzenelson, was, doing your investment research, how does he find out about businesses? There was a couple of questions about valuation, but also about the health of the business, that he had great answers that were also kind of complex. So I can't talk about it, right, only have a few minutes here, but one thing that he did say, which I thought is great to actually share with the audience here, is what he does, what Vitaly Katzenelson does, is he talks to friends about it, but also he's got mentors, he's got peers within this investment strategy, and he discusses cases with them. So he's open about with his peers and with his mentors and with people in the community about what he is looking at, and he's seeking advice. And Warren Buffett also mentioned it at the event that when he was young, he would go talk to CEOs. There's a good old story about how he went to Geico and was banging on the door on a Saturday and talked to someone in Geico. And Warren Buffett also said, well, today it's very difficult to get to talk to CEO of businesses. You simply don't get that opportunity today. I do know actually quite a few of the hedge fund managers that does get access, and they don't necessarily have hundreds of millions under management, but they do get access to some of the CEOs in companies they are thinking about investing in. So what we can use is Vitaly Katzenelson's advice and do some sparring, have some conversations with peers, with people that are also doing this type of investment strategy about the case that you're looking at. Because what Vitaly Katzenelson said is that ultimately what he was trying to do was, of course, he was trying to not invest in a company. So just like Warren Buffett, always trying to put it in the too difficult pile, or that it's not a great investment. And sometimes, when you bring up, oh, I'm looking at this or this company, a peer or a mentor would say, oh, watch out for this. And then he would also have some information there that he might not know about himself. So I think that's also great advice for us. Another thing he also said, there was so much good stuff. His Q&A, if he's going to continue to do it or in some capacity, I really recommend, if you go to Omaha, if he's there, go check it out because it's really good. So he said, watch out for looking into the 13F filings, especially for my own fund, but also for other super investors, because what he said is that IMA, which is his company, is actually only invested, like 40% of his portfolio is invested in the United States and 60% is invested outside of the United States. So he's got $250 million in the United States, and then the rest of the fund is invested outside of the US. He was looking into companies in Europe, Japan, and he was interested in actually buying Israeli companies. So great information as well to, be looking, because I was surprised about companies in Israel because of the given situation right now in the country. But I do know that there are still great businesses down there. So I do understand what he's saying. But yeah, I just think maybe because of the current climate that these businesses, are they still focusing on driving business, or is there, other things that are also on their mind? So, but it was interesting to hear.
And that's definitely a good lesson because we know other investors like Monish Pabrai invest abroad a lot and are probably more invested abroad right now than in the States. So that's a good lesson.
Absolutely. So it's something that he said, well, watch out, because what you see in the 13F filing is not all our portfolio. So watch out. You might think that we're 100% in the United States, but we're not. So in the 13F filings, you can only see American businesses. And that's the thing, that we kind of rely on these fund managers to tell us if they're not only in the United States or which other areas they're in. So yes. Well, I want to say I also went to Matthew Peterson's event, Berkshire Soiree, as he calls it. And, Michelle, you've also been there. It used to be a barbecue, like a fantastic networking event. And Matthew, he's such a fantastic person. And he actually gave all the attendants there access to his new AI tool that he's developing in collaboration with one of Warren Buffett's close partners, so to speak. So that's actually interesting, right? That one of Warren Buffett's acquaintances is interested in having AI do part of the investment research. And so Matthew, he's on a project with his team to do that. And I've had access for a while. I think I also talked about it in an episode, and it gets better all the time. So that's great.
Yes, I agree. Like Matthew Peterson is an amazing person and investor, and he has got so much to teach. So I know we've both benefited a lot from learning from Matthew, and it is really cool if you get the chance to check out his AI generated reports. Feel free to get in touch with his team if you want to be part of their sphere. I think you could learn some valuable lessons if you were to want to check out what Matthew is all about. He's a very giving, generous person. He wants other people to also get fabulously rich. So I think we could all benefit from learning from Matthew. He's a wonderful guy.
Yeah, absolutely. And he also actually talking about not be only being invested in the United States. I know that he's looking into Turkey as well as some other countries for investments there, and has gone to Turkey a couple of times to talk to management of companies in order to actually potentially invest with those publicly traded businesses. On Friday, Guy Spear is hosting Value X at Berkshire. He has Value X, which is a huge event in Switzerland. Like, I've heard so much amazing accolades on that, but he also have a smaller one at the Berkshire meeting, which is also a little bit different. So he invites some of his network to come. Every person has 15 minutes to give a TED talk. If you know about TED Talks, it's similar to that. He had some great people this year coming, like one of the Berkshire directors. He had, again, Robert Hagstrom, Brian Lawrence, which always have some great stuff. William Green was there, Monish Pabrai, one of the companies in Germany that Berkshire Hathaway invested in. So again, an international company. And one of the directors, I believe it was the CEO, came also to talk about the Berkshire Hathaway values. So one thing I can take away from both Vitaly Katzenelson's QA as well as Value X is around index funds. And so there's a lot of talk about ETFs in index funds right now, because there are some warning signs that it right now is maybe not the best time to invest in ETFs following an index. And if you look at the Shiller PE ratio, I believe we talked about that in the past, that also indicates that right now it could potentially, and we talked about, this decade where potentially we would, it's called a lost decade, where you would not earn money in being invested in index funds. So in this index funds, investing is different from investing in individual companies. And what Vitaly said was that it could take 10, 15 years if you invest in an index fund right now and just keep it. It could potentially take 10, 15 years before you would actually your money would start compounding. He's talking about the lost decade there. And also, Guy Spear had Michael Green, who is a fund manager, come in and talk about the passive investments are now the dominant. And what he means by that is that people, individual investors, pension funds, etc., are investing in ETFs, which is a passive way of investing. So they are not actively picking stocks, but instead passively investing in an ETF that follows an index. And that we showed some facts there that actually showed that passive investing is now dominant. And he did say that there was some warning signs there. So that's what we hear. And if you are thinking about investing in an ETF right now, it could take some time before you would actually get a return. What Warren Buffett has said in the past about that is, if you do that, you need to invest, like, for example, every month through thick and thin was the words he used, and especially through thin. So right now, where it's the market is maybe to a great extent overvalue the index funds. And so if you want to invest in index funds, you maybe need to do some dollar cost averaging, like investing every month, and then you potentially maybe could make money. Maybe it's difficult to say, but there was definitely quite a few people speaking against that right now.
Yeah. And it's just ticking time bomb as far as when index fund investing will pop its bubble. Like, we know it's been a successful investment for years, and it's far exceeded the historical averages. Like, if normally you would only expect to get 7 to 10% returns on the S&P 500 index fund, but for like 5 years straight, it's probably been averaging around 15% a year, which is incredible. Like, that would be kind of along the lines of what one of our mentors, Phil Town, is aiming for. And he tries to get that out of normal stock investing. But people have been getting that through passive investing, which is amazing and wonderful. So it's been great for many years. But now it's like, okay, now it's kind of skiing too far ahead. Like, you're kind of going way too beyond your normal ability to get good returns. So yeah, I can see the warning signs flashing. So yep, it's possible that that's going to happen. But a lot of people are just going to be stuck because they're forced into it from their 401ks and retirement accounts, that they don't know what else to invest in but some of these funds. And I guess we'll see what happens if that could happen or not. So yeah, and this is really good lessons learned. So thank you so far for sharing these lessons, Signe.
Yeah, you're welcome. The last thing that we can end on is the German CEO. It's a company that produces motorcycle equipment. So not necessarily equipment, but accessories, like jackets and helmets and that stuff. And Guy Spear, was a big fan of the products. So one of the CEO of the company, the German company, actually came and gave a talk about some of the values that he has experienced from being a Berkshire-owned business. And he says, so there's 5 values he talked about. One is trust. So that one thing he says is that Berkshire trusts management to operate. And that's also actually what Warren Buffett has always said. So that seems to be true. That's also this CEO's experience, that he gets to operate the business exactly as always. The next thing is appreciation, that they feel very welcomed and appreciated. So also back to what Warren Buffett said at the Berkshire Hathaway meeting, that he's good at cheerleading. And rules, so that's also a value, and that's interesting, right? So rules was meant as sort of like almost like a checklist or something like that. So a rule, what he said is liquidity is a top rule for Buffett, and focus on operations of the business. Continuity, like the holding company or the holding period for a company is forever. So he spoke to the fact that Warren Buffett is a long-term investor. Warren Buffett talked about that at the Berkshire Hathaway meeting. Also, somebody asked about, the long-term and being patient. And Warren Buffett says, oh, yeah, you need to be patient within this investment method. But once you need to take action, you need to do it immediately, right? So it's being very patient. But when you need to take action, you need to act right now. You can't be patient when you need to take action. The last one was that a big value in Berkshire Hathaway is values. Reputation and integrity. What this Joachim, or Joe, as he called himself, the CEO here, is, he said that losing reputation is unbearable. It's funny because when I think about Germans, I also think about a lot of these rules are also great with the German way of being and as they are as a people. So, but yeah, it was great. Monish came in towards the very end and talked about that the best investors were entrepreneurs that never sold. So don't look too much towards Shark Tank if you're an entrepreneur. You don't want to sell off part of your business. You want to make sure that you keep most of the company under your, and being a majority owner. And yeah, so great lessons.
Wow, that's pretty cool. Wow, thank you, Signe. That sounds like there were some valuable lessons learned at the Value X conference as well.
But you can watch that on YouTube. I also want to say that, share that with the audience. You might not be able to see all of the talks. I'm not sure if all of the talks are available, but I know that some of them are already released on YouTube.
Well, that's great. And I think we were just talking offline a little bit about who knows if these events will continue to happen at Berkshire in the future years, but we won't dwell on that right now, since this has been a really enriching podcast episode. And thank you so much, Signe, for sharing all these highlights and wisdom from the many incredible investors you saw at the Berkshire meeting this year.
Yeah, I'm really happy to share it. And yeah, I hope you also got something out of it, also the listeners here. So this was it for today.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts, so you automatically get new episodes in your feed.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.